Okay, picture this. It's late 2025, and something really strange is happening in the financial markets. We're seeing this deep split open up, and it might not be just random market noise. It could be a sign, a signal of a massive planned shift in the entire global financial system. So let's dive into what that could possibly mean.
So here's the puzzle, right? On one hand, you've got gold, the oldest, most trusted store of value in history, and it's just blasting off to new all-time highs. But on the other hand, you have Bitcoin, which everyone calls the hardest money ever invented, and it's just stuck. It's struggling, still trying to recover from this huge liquidation event in the crypto markets. What on earth is going on here?
Is this just a simple market rotation? Money getting scared and running from new age digital assets back to old school physical gold? Or, and this is where it gets interesting, is this something far bigger? Could this be a managed, coordinated global reset designed to re anchor the entire financial system? All right, let's start with what the market is actually doing because the numbers here really set the stage for this entire theory. We have to ask, why is the world's oldest asset all of a sudden crushing its digital successor? I mean, the sheer scale of this split is just wild. You've got gold continuing this historic run, pushing up to $4,300 an ounce. And then there's Bitcoin, which took a nosedive below $110,000 after that massive crypto sell-off. This isn't just a small gap, you guys. This is a profound break between what are supposed to be the two top safe haven assets in the world. And this kind of market weirdness, it doesn't just happen in a vacuum. It's usually a symptom of a much deeper problem. In this case, it might be a crisis that is literally forcing Washington's hand, pushing them towards a pretty radical solution. Just look at the pressure cooker the U.S. financial system is in. You've got record deficits for a time of peace, the Fed is being backed into a corner, having to cut interest rates even though inflation is still stubbornly high, and here's the big one. Foreign countries are losing their appetite for U.S. government debt, right as the petrodollar system, the deal that keeps global oil priced in dollars, is starting to show serious cracks. Macro analyst Luke Groman has this perfect analogy for it. See, for decades, pricing oil in dollars meant the whole world had to buy U.S. treasuries. He says that system breaking down is like putting a hole in an airframe at altitude. And as he points out, it doesn't take a really big hole for you to lose pressure. Just like on a plane, things can get real bad real fast. So this all leads to the big takeaway. Washington is trapped. They're in an impossible bind. If they raise interest rates to try and save the dollar, the interest payments on their own national debt would absolutely explode. But if they just keep the money printers running to pay the bills, they risk shattering global confidence in the dollar completely. Both roads lead to disaster. So what do you do? What do you do when both of your traditional options are terrible? Well, this one theory suggests you don't choose either. You pick a third option, a truly audacious plan to just quietly reset the entire system. And that brings us to the gold revaluation theory, which has been put forward by people like former Wall Street trader Josh Mandel. The core idea is basically a giant accounting trick. The U.S. government could just decide to reprice the 8,100 tons of gold it has sitting in its vaults to a much higher value. And just like that, its balance sheet looks healthy again and faith in the dollar is restored. And the math behind it is almost ridiculously simple. You see, on its official books, the U.S. values its gold at this totally fake price of $42 an ounce, a number that's been frozen since 1971. The theory says they could just change that number, mark their gold to a new, higher price, let's say around $16,000 an ounce. Boom. Overnight, the value of their assets skyrockets, and suddenly, all that debt doesn't look so bad. And they did it without ever having to officially default? Now, I know what you're thinking. That sounds completely insane. But there are some really fascinating clues buried in the financial data that suggest maybe, just maybe, this isn't so crazy after all. Let's follow the numbers.
Okay, let's start with this first clue. Just this one number, 11%.
So what does that mean? Right now, if you took all the official US gold and sold it at today's market price, the money you'd get would only be enough to cover 11% of the US government debt that's held by other countries. That is a dangerously low level of collateral. Now compare that 11% to the historical benchmark for this exact same ratio, 40%. Yeah, for decades and decades, the normal long-term average for how much gold the US held compared to its foreign debt was around 40%. We're at a level today that's nearly 4 times lower than the historical norm. That just shows you how out of whack the system has become. So that leads us to the million-dollar question, or maybe the trillion-dollar question. What price would gold have to reach for the US to simply get back to its own historical average of backing 40% of its foreign-held debt? And the answer is right around $16,000 an ounce. That's the magic number. And the fact that this number, which we got just by looking at historical data, lines up perfectly with the revaluation theory, well, it suggests this might not be just a random gold rally. It could be a planned devaluation of debt, disguised as a bull market in gold. But a plan this huge, it takes time to pull off. You need a way to keep the lights on, to keep the system funded, while you wait for gold to get to your target price. And that bridge might just be stablecoins. Think about it. These dollar-pegged tokens are mostly backed by short-term US debt. So as the global crypto market demands billions more in stablecoins, they are unintentionally buying up US debt, which gives Washington the precious time it needs to execute the plan. And that, of course, brings us to the final piece of the puzzle. If gold is the bridge, the tool they use to fix the old system, what's Bitcoin's role in all of this? What happens after the big reset? Well, it really all comes down to one word: control. A government can influence the price of gold, and as we've seen, they can officially revalue it by decree. It's a tool that the state can control. Bitcoin, though, that's a different animal entirely. It's a neutral, uncontrollable asset. Its price is set by the free market, period. You can't just decree a new price for Bitcoin. And that's exactly why gold has to go first, to fix the government's balance sheet on its own terms. But even while gold is getting all the attention, if you look closely, you can see the big players getting ready for Bitcoin's turn. The global hash rate, basically the security of the network, is in this massive bull run, which means huge industrial-scale mining is happening. The US government itself is quietly becoming one of the biggest Bitcoin holders in the world through seizures. And you're seeing powerful political families getting into the Bitcoin business. The chess pieces are definitely being moved into place. Analyst Luke Groman really sums up the whole strategy for the rest of us with this quote. He says that in this crazy monetary storm that might be coming, gold and Bitcoin is just the arc. They are the two assets designed to get you and your savings safely to the other side. So we're left with this one last, pretty provocative question. Is Bitcoin's sluggish price right now just a normal, boring market cycle? Or could it be a sign of managed suppression, a deliberate move to keep it on the sidelines while gold does all the heavy lifting, setting the stage for a global reset, all before Bitcoin gets to play its final starring role?